Hey, good afternoon, everybody. Thank you so much for taking time out of another Tuesday to join us in our push to help you diversify your product portfolio with some ancillary products that are going to meet needs outside of Medicare. We have a great partner, a brand new partner with us today, United National Life, Mr. Sean Lanore. He is going to go over their three flagship products, if you will. He has a hospital indemnity, a guaranteed issue hospital indemnity, and a great dental plan. These products make it super simple for you to cross sell. There's not a whole lot of underwriting, if any underwriting at all. So it's a great kind of no brainer way to start adding ancillary products to your portfolio. So we are glad that you joined us. I'm going to turn it over to Sean. He has all the fun information. And Sean, you can take it away, sir.
Thanks, Courtney. Appreciate it. Again, thank you everybody for joining and kind of attending this. This will be a lot of really good information for you. If you have any questions, feel free to just use the raise hand icon if you're going to come off mute. If you're going to type it into chat, we'll have an individual that will kind of touch base on that to make sure that we're getting those questions answered. If it's a question on a topic that I have not discussed yet, I would just hold it because I probably will discuss it and answer that question if you just wait 5-10 minutes. But if it's on something that we're discussing currently and I haven't said anything about it and you have a question come up, obviously feel free to chime in there. Okay, so a little bit about myself. I've been in the industry for a decade, almost over a decade now, which is kind of shocking. And I did exactly what all y'all do. So I was an agent. I have talked to and called thousands and thousands of clients. I've mentored over 2,000 agents in my day. So I know what it's like to be in your shoes. I know what it's like to be going to homes. I know what it's like to be selling. I know what it's like to be selling all these products, Medicare, supplements, ancillary products like hospital plans and home health care plans and cancer plans and stuff like that. So I know exactly how that is. I've been in your shoes multiple times. So everything that I discuss with you is going to be coming from the eyes of an agent. And why I have so much passion behind what I will discuss with you guys and what I teach you guys is because of my approach in sales. My approach with Medicare, my approach with my clients is always how can I help them get the most comprehensive plan structure possible. I don't care about how much commission I'm going to make. It's about how can I help the other person. The commission will come in turn. The money will come flowing in after the fact. But if I'm doing what's right and I'm actually helping these individuals, I'm going to get a lot more clients and I'm going to protect my business. A little bit about UNL. We was founded in 1961, very strong financial insurance company. We fill a very specific niche market where we provide products that fill the gaps of Medicare. So we provide supplemental products that fill those gaps of Medicare that Medicare does not cover, which is those copay costs and all those costs that would be your client's responsibility if they have a Medicare Advantage or just traditional Medicare. When we create products, we like to make sure we're checking off three boxes. The first one is we want to make sure it's easy to understand for you and your clients. At the end of the day, confusing people, I don't know what they do, but I do know that they will not buy insurance. So the last thing you want to do is confuse them with a bunch of information. So we like to make sure our products are super easy to understand and explain. We also pay our claims fast. So we pay our claims in 5 to 7 business days, which is half industry standard. And we also provide really good comps. So that means good for you guys because if you're selling the products, you're actually making, good compensation for it. Okay, here's a footprint of all the states that we are currently in. We're beginning Florida here pretty quickly and pretty much the rest of the United States. The only states that we're not going to get are California and New York. Okay, cross-selling. So this is going to be the single most important thing that we'll discuss today. Cross-selling is essential in this industry, and it's a game changer for you and your client. So it's actually going to help your clients significantly because you're going to be utilizing your time and energy as best as possible, as well as your clients. You're not just going into a home and selling a Medicare Advantage and burning and turning, and then going to the next home and selling a Medicare Advantage, and just keep doing that, right? You're actually going into the home and you're trying to understand how they utilize their insurance, how they're going to use it on a day-to-day basis, maybe some things that they could be thinking of that could come up, or what their current health is at. And then you're going to build a comprehensive plan with multiple plans in order to build them the most comprehensive plan structure every time you go into a home. The reason why you do that is because it's going to increase your persistency and protect your book and protect your renewals. I'm sure every single person on this call wants to make an extra $50,000 this year. And I'm sure that all of you want to get to the point where you're making $100,000 a year in just residual income. That means you're not going out and selling any more new business. It's just money that's coming in while you sleep with a current book that you already have. In order to do that, you need to sell more than one policy in a home. If you're just going into a home and you're burning and turning and selling Medicare Advantage, that is the quickest way to weed yourself out of this industry. You probably won't make it much more than 2 years, truthfully, because you're not what's doing right by the client. You're also, by selling one policy in a home, you have a 30% chance or less to retain that client on your book of business. If you sell two policies or more in a home, you've now increased it to 60% chance to retain them. And if you sell three or more policies in a home, you have a 90% chance or greater to retain that client for life. So not only are you helping your client by getting the most comprehensive plan structure by selling them a Medicare Advantage, a hospital plan, potentially a home health care plan, and even a cancer policy or a dental, you are selling them three policies in a home, which is increasing your persistency by 90% or greater, meaning that you're going to retain that client. Doesn't matter if the best salesperson in the world shows up to their house and tries to sell them a plan, they are not going to change their plan because they've got three or more policies with you. It doesn't even matter if it's a Medicare Advantage and saving them $50 a month or $100 a month. They are not going to change the plan until they talk to you because you've got three or more policies in line with them, and they will be afraid to change something and mess everything up. I promise you that's how it works. I've been doing this for a decade. I have experimented with this. I have witnessed this in person. This is how it works. They have more than one policy. They are going to call you up every time and say, "Hey, John from whatever company was talking about a Medicare Advantage policy with me, and it sounded great, but I wanted to touch base with you because I know we have a hospital plan with you and we have my cancer, and I just wanted to make sure I didn't mess anything up." Beautiful thing to think about that is now that you have that conversation, you could take a look at that Medicare Advantage plan and see if it is a better fit. If it is, perfect. Just go ahead and change them if you're able to do so. If it isn't, you could explain to them why it's not better, and then you just protected your book even more, right? And solidified it like that. And then the third thing again is just increasing your paycheck tremendously. If you pitch these products in every single home that you go into, you're going to sell between 2 to 3 of those in every single home. If you're sitting with 10 people a week, you're going to see anywhere between 30 to 55 to $60,000 in your bank account extra on top of what you're already making. So you can really change your life, make a drastic impact not only in your clients but also on yourself. Okay, here's an overview of all of our products. I'm just going to go through this relatively quickly so we can kind of get into the rest. Hospital Indemnity Shield, that's going to be our hospital product. It's going to fill those gaps of Medicare does not cover, so it has a hospital copay. Our guaranteed issue is going to be the same thing. It's just for a guaranteed issue product. So it's for someone that is unhealthy, that needs a product that no matter what is guaranteed to be issued. Our Cancer Shield 2.0, again, cancer is a product that we don't do very well talking about in the industry. It's probably because it's a really difficult topic. At the end of the day, I'm not going to dig too much into this, but if you do want some training on it, we do have training videos, and or you can reach out to me directly and I can discuss a little bit more deeper on that. But just to give you a quick sales tip on cancer, I'm sure many people do this. I made the mistake of doing this too. Most people say when they get done this, "Hey, Mrs. Smith, does cancer run in your family?" Never, 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 never say that. That is the quickest way to lose a sale because only 10% of cancers are hereditary. So it's actually much wiser and a much better sales question to say, "Hey, Mrs. Smith, what's your experience with cancer?" And then let that build into a traditional conversation to see if a cancer product's suitable for her. The next one is going to be our short-term home healthcare. This is going to be the easiest product to place in a home. The premium, it's pretty much pays for itself with the prescription drug benefit that we have built into the plan. Again, I don't know if we're going to have time to discuss this one, but you can give me a call. I'd be happy to go over it one-on-one with you. If you go to our training videos, you can pull up a 25-minute training video where we just talk about this specific product. We actually do that for all of our products, but you can do that as well. The UNL Caregiver Shield, this is going to be for an individual that is expected to pass away in 6 months. The beneficiary would get 10, 20, or $30,000 after a 100-day period. They get paid out daily, so it's $100, $200, $300 per day, up to a 100-day period, while they're taking care of that loved one during their last 6 months of their life. The Dental Shield 2.0, absolutely love our dental product. I will dig into this in full detail towards the end of the presentation. You guys are going to love this as well. It's a very, very easy product to place in a home. And then our final expense, we haven't rolled that out yet. That's going to be rolling out potentially next quarter, if not Q3. And essentially, it's just a whole life insurance final expense product, goes up to $30,000. There's no smoker question, which is really great because pretty much every other life insurance product has a smoker question, and it's very lightly underwritten. So really great product just to place in a home. Okay, so I'm going to skip through some of these here because this is for the home health care, and we're not going to have time to discuss that in full detail. So hospital indemnity. Okay, so the number one reason why an individual hits their max out of pocket in a Medicare Advantage policy is because of their hospital copay costs and being diagnosed with cancer. Those are the two reasons. The first one is hospital costs. Second one is going to be diagnosed with cancer. You'll hit your max out of pocket almost immediately when that happens. So seeing how that the hospital cost is a super high risk area and it's a high cost normally. It's $300 a day for days 1 through 5. So if Mrs. Smith is hospitalized for one copay period of 5 days, she's got to pay $1,500. And then the max out of pocket is going to be anywhere between like 4,000 to, I've seen them all the way up to like 8,000, depending on which state that you're in. So it's a really, really high overhead cost that's just kind of lingering over our client's head that they will have to pay eventually. So when you're creating the need for a hospital indemnity plan, this is where most agents kind of struggle in figuring out how to approach this. So the first thing is when you're pitching that Medicare Advantage policy, once you have to go over the baseline benefits, right? It's required by Medicare that you go over baseline benefits before you get into a Medicare Advantage application. During that process, there's a very particular part where you're going to talk about the max out of pocket. You're going to talk about the premium of the plan, the name of the plan, and the copays that they're going to have to see a doctor, and copays for prescriptions and anything else that may be inside of that, like dental, vision, anything else, right? Well, once you get to the part where you're talking about hospitalization, so you're saying, Mrs. Smith, this is the United Healthcare blah 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 plan. Your premium is going to be $0 a month. Your hospitalization copay is going to be $0. Or sorry, it's going to be a $0 copay to see a primary, $50 copay to see a specialist. If you're hospitalized, though, you're going to have to pay $300 a day for days 1 through 5, and then $0 a day for days 6 through 90. So if you were to be hospitalized, Mrs. Smith, you'd have to pay $1,500 just for a 5-day period in the hospitalization stay. And as you can see here, that your max out of pocket, I'm just going to say it's $3,000 for this reference, is $3,000. So the most that you would have to pay in the course of a year would be $3,000 before your insurance covers you for the remaining of the year. Now, Mrs. Smith, this is a super high risk area for you. You've an 85% chance or greater to be admitted in the hospital in the next 5 years, and the average stay is actually 5 days. So it's going to cost you well over $1,000. Remember, if you look at your plan, it's going to cost you $1,500 if you're in the hospital for 5 days. But not to worry, because I'm going to show you how we can cover all of those costs, even your entire max out of pocket, at a fraction of that cost. That way you don't have to worry about that. All you have to do is pay a small monthly premium. That is how you create the need. Exactly, perfectly just like that. And I actually use that example as if I was going in after I had talked about a Medicare Advantage policy already, right? So a lot of you it should be clicking in some gears here. So the plan itself is very simple. It's going to pay, UNL will pay $100 to $750 per day should your client be hospitalized for a 24-hour period in either observation or confinement. So this is key. This is in either observation or confinement. They don't have to be in confined into a hospital room or anything like that. Either or. It's just 24-hour period. Now, this is a calendar year plan, so it's from January 1st to December 31st. There's no restoration during the year. Individuals that can qualify, ages 55 to 85. And then there's a lot of different riders that you can add on. So the ambulance benefit rider, this is a absolute no-brainer to add on to every single policy. It's $2 and some change. And I couldn't tell you how many times that I've talked to clients that everyone's going to have a copay for an ambulance. And a lot of times they don't call them because they don't have the copay amount. They can't pay the copay. It's 300, 250, 400, whatever it may be, and they can't afford it. So they just don't go. Well, if you tack on this rider for $2 and some change, they would cover that cost of that copay for them. So they could call that ambulance. For $2 and some change, I would add it to every single policy. Skilled nursing facility benefit rider, and outpatient surgery rider. These are just really great riders that are good to add to the plan, creates more value of the policy itself, but also provides a really good benefit to your clients of areas that are high risk for them. Cancer lump sum benefit rider. This has a 5-year look back for the cancer lump sum benefit, and you can tack this on to give them some coverage if they don't have a cancer policy, don't want to purchase a cancer policy, but don't mind having a rider on their hospital plan, or if they already have a cancer policy, but they want to have some lump sum benefit, they can add this on as well. Terminal illness rider, again, is a great way just to increase value of the policy. And then the outpatient benefit package, this is a really, really awesome rider to add on to the policy. I would add this to every single policy as well, just because these are high risk areas and they always have copay costs within a Medicare Advantage plan. So emergency room and urgent care visits, it'll help cover copay costs for that. Outpatient rehabilitation and therapy also will help cover for that as well. And then outpatient diagnostics, advanced diagnostics. So that's like CT scans, MRIs, stuff like that, right? They're going to have copay costs for things like that. So having that rider there available to them to add on at not a very high cost is super beneficial for your clients, and it's going to help them a ton. Now, when you're setting up this plan, there's some very specifics on how you want to do it. So how I want all y'all to do this is I want you to always select 10 days. Even though it says between 3 to 10, and most copay payers are going to say 5 days, I want you to always select 10 no matter what. For two reasons. The first reason is it's going to cover 2 copay periods. So God forbid Mrs. Smith is hospitalized twice in a year. We know that she's going to be covered. Both of her copays, $1,500, is going to be covered. Now, the reason why we're selecting 10 is we're then taking the max out of pocket, which I said in this plan concept that I'm doing here is 3,000. So if it's 3,000, then we select 10 days, we take $3,000, we divide that by the 10 days, that gives us $300. That is the dollar amount we're going to select for the plan. Okay, so it pays between 100 to 750. So we're going to select 10 days, we're going to select $300 a day, because Mrs. Smith's responsibility is days 1 through 5 at $300 a day, and her max out of pocket is 3,000. That's how we're getting the 300. That way, God forbid, Mrs. Smith is hospitalized twice, 3, 4, 20 times in a year, does not matter. All of her copays will be covered, and her entire max out of pocket will be covered by us. And then that means anything else that happens to her for the rest of that year, her Medicare Advantage will cover everything, so she won't have any costs. And all she has to pay is her small monthly premium with us to have the plan. Okay? So here's a quote of that exact same concept. So I chose 10 days, did $300 a day. This is for a 65-year-old. I added a $250 outpatient surgical rider. I added the ambulance rider in there as well with the policy fee. Brings a total combined premium to $23.60. What's super important, and I don't know if you guys are going to be able to see this, but I'm going to pull this up really quick. If you can see this calculator here, the calculator is going to be your best friend in sales, especially insurance sales. How I would pitch this to Mrs. Smith is I would just do that whole process right there, and I'd break that down to her the exact same way I just broke it down to you guys. And then I would say, Mrs. Smith, so would you rather pay $3,000 a year? God forbid anything happens to you. If you're diagnosed with anything, if you're hospitalized twice in a year, this is what you're going to pay minimum and maximum, because it's your max out of pocket. Or would you rather pay $23.60 a month times 12 months in a year, which is only $283.20 every single year in order to protect you from ever having to pay that $1,500 or ever having to pay that $3,000, because this is going to cover your entire costs for your hospitalization, and it's going to cover your entire cost for your max out of pocket. So once that's paid, Mrs. Smith, your insurance will pick up the remaining balances that you have on any medical costs for the rest of that year. And this plan's a calendar year plan, so it's going to renew for you starting next year. So once you've used this plan up and it's paid out your entire max out of pocket and your insurance covers you for the rest of the year at no cost, when next year rolls around, this plan is going to replenish in full. So you'll be able to do the exact same thing that next year. So that way you always make sure that you're protected no matter what moving forward for the rest of your life. What makes more sense for you, Mrs. Smith? Paying $3,000 a year or paying $283.20? And that's where you stop. That's the close. Next person to talk loses is the sales saying that we always say in the industry. And I can promise you that Mrs. Smith's going to talk first before you, because she's going to say, okay, well, like, what do I got to do to get this set up? Right? Or she may have some more particular questions about how it works, but that's how you're going to pitch this plan. Okay, now the guaranteed issue. It is well, let me go back really quick. Underwriting. This is a fully underwritten plan, so they do have to pass underwriting. We do have straight through processing though, so you will know right away whether they are approved or denied. You don't have to wait days or anything like that. Now, sometimes there are one-offs where underwriting has to do a little bit more digging. That just can happen, so just expect that. Immediate knockouts. Diabetic, taking insulin, COPD, heart disease, and been hospitalized in the last 18 months. Okay. Does this increase with age after it's taken out? Yes, it does increase with age. It does not go up by a lot. It only goes up by like a couple dollars, so it's not a drastic amount. I will also show you here if I still have it. I don't know if I have it in here or not. I don't. Okay. So I have the rate sheets, but I can get these over rate sheets. You can also download them. And I can show you where to do that as well. If you guys are all contracted, I can show you where to get the training videos and where to download some information. But as far as it does increase, it is not issue age, it is attained age, so it does increase, but it does not increase by drastic amounts. Basically, in the net, like within 10 years of them having the plan, it's not going to increase a drastic amount to where they won't be able to afford it. It's still going to make sense all the way up until they pass away, because the costs for hospitalization are so high. The cost of this plan is really low in comparison. Okay. And then the last thing would be there's a 6-month pre-existing condition period on this plan as well. So if they have a condition preemptively before purchasing the plan, they can't claim on it until 6 months after. Bob, you said, does this piggyback with any of your other products? Yeah, all of our products piggyback together, truthfully. You know, when it comes to a Medicare Advantage policy, there are so many holes in those policies that these plans they coexist together perfectly, which is, you know, essentially what you want to do in every home is you want to be pairing these up. I mean, if I was walking into a home, I would sell a Medicare Advantage, a hospital indemnity, a home health care, and a dental plan in every home. Easy, all day long. Because they need those products, and those products are really easy to pitch in comparison with the Medicare Advantage, especially if you're pointing out the gaps of the Medicare Advantage and your client's responsibility. The guaranteed issue, so it's the exact same thing as a traditional hospital indemnity. There are a couple differences. There's not as many riders, so these are 2 additional riders, so the ambulance rider and the outpatient surgery rider. The pay goes down to $450 instead of $750. It does go up to 12 days, so you can extend out to 12 days if need be. Issue age is 64 to 85, so this is going to be for those individuals that are Medicare only. 12-month pre-existing condition period on this policy, and then a 60-day waiting period, so they can't file a claim the first 60 days. That's just because we know guaranteed issue that they are going to file claims. So the insurance company, our actuaries made it a 60-day waiting period, so that way we could at least get some money in before we're going to be dishing out a lot for these individuals. Outside of that, it's the exact same plan. It's just a guaranteed issue product. This is for those individuals that are not going to pass underwriting. This is the route that you're going to go. Now, it's double the cost though, so keep that in mind. It's a guaranteed issue, so it's more expensive for that reason, because we know we're going to be claiming on it. We know we're going to be paying out lots of claims, so the cost has to kind of even that out, right? So it's the same scenario. Mrs. Smith, she's got that United Healthcare plan, $3,000 max out of pocket. I selected 10 days, selected $300 a day, did the $250 outpatient surgery, added the ambulance rider, policy fee, brings the total combined premium to $59.01. Now, it seems like a lot, but I want to do this math again for you. If you were looking at this, is it more feasible for Mrs. Smith to spend $3,000 every year? God forbid especially if she's a guaranteed issue, because she's guaranteed going to be in the hospital. Okay. Does it make more sense for her to be spending $3,000 a year every year? Or does it make more sense for her to spend $59.01 every month, which is $708 a year? What makes more sense for Mrs. Smith? The cheaper price, right? So that's how you want to pitch it to them as well, even with these guaranteed issues. Yes, it looks high, but Mrs. Smith, how often have you gone in to see a doctor? How often have you been in the hospital in the last 2 years? What, the last 12 months? Have you been in at least twice? If you've been in at least twice in the last 3 years, this plan pays for itself. You absolutely should have this. If you've been in it more than that, then you are doing yourself a disservice by not having this plan, and you're costing yourself a lot of money, and it's just going to get more expensive as you get older. We're going to move on. So dental. Most dental plans are terrible. Let's just be real. I've done this for a very long time. I've sold a lot of products, and I stopped selling dental products because they had all these gotchas and all these like inside things. Once I like dug into like the policy documents and I started reading into them, I noticed that they had inside limits, which if you're not familiar with what that is, it just means the insurance company limits you on how many things you can get done. So like you can get this many root canals, this many extractions, this many of this many of this many of this, right? That's an inside limit. We don't have any of those at all in our plan. They can get as many things done as they want up to their benefit maximum. We also don't have any non-usual or customary or reasonable charges. If you don't know what that is, the insurance company can dictate what they will pay on a procedure, what they think the procedure should cost. So if you get a $2,000 root canal done and the insurance company thinks that root canal should only be $1,500, they're only going to pay 20% of $1,500, not of 20% of $2,000. So your client's actually getting screwed in that situation because they don't tell you that with the dental plan. You just have to find out when you dig into the 500-page document. We don't have that at all. We pay 80% of whatever the bill shows once your client has met the $100 annual deductible. That's it. There's no gotchas, there's no inside limits, there's no non-usual or customary reasonable charges. It is just 80% of whatever their bill is once they pay their $100 annual deductible up to their benefit maximum. We can go all the way up to 5,000, which is absolutely huge for your clients. And there's no network. That means they can keep seeing the dentists they've been seeing for the last 20 plus years. This is huge for your clients. Now, what's also really amazing is that we do have waiting periods. Now, waiting periods are nice because of sticky business. Dental's the only insurance out there that someone picks up and then cancels the day after they use it up. So in order to protect you guys and protect your book, we have waiting periods. Now, there's no waiting periods for any preventative x-rays, preventative care. They get 2 dental cleanings per calendar year, up to $100 per cleaning, which is pretty standard across the board. 6 months for any restorations or regular x-rays or non-surgical tooth extractions or any palliative care like gum disease. And then 12 months for any non-cosmetic coverage. So root canals, bridges, dentures, crowns, stuff like that. Now, if your client has had dental coverage, credible dental coverage for 12 months previous to purchasing UNL's dental, we will waive all of the waiting periods. So if they have like dental coverage through a employer and they just retired, they just got on Medicare, they're going off of group coverage, that would qualify. If they have Delta Dental for the last 12 months or something like that, or Aflac Dental if they have it, or Aetna Dental or something like that. They just had separate dental outside of a Medicare Advantage dental, then they can qualify for this. They can get all the waiting periods waived. If it's just a Medicare Advantage dental, they do not qualify. They have to wait the waiting periods. Implants. Implants would be covered if it's medically necessary, Howard. If it's just because they have a missing tooth, it's not medically necessary. They just want to put a fake tooth put in because they don't want to have that missing space. No, that is not a medically necessary procedure. That is a cosmetic procedure, so that would not be covered. How does this coordinate with my Sonder plan, which is 4K in benefits? Are you talking about your dental, Bob? If you can come off mute, it may be easier for you to explain that than just in text.
Yes, sir. Excuse me. Yes, sir. Yeah. Yeah, it's an Advantage plan. And I have Carrington, and I was trying to, my long-term dentist, I have several implants I need. And I said, what happens when I use up my benefit? Will I be able to use Carrington? They said no. So I basically fired my dentist. So,
Okay, bummer. Well, I'm sorry to hear that. So if yes, you can use this in conjunction with a Medicare Advantage. Let me teach you how. I'll give you a perfect example. So let's say you go in and you need to get a procedure done, and it's going to cost you $1,500. Okay, and you purchased our $5,000 plan. So it's going to cost you $1,500 to get that procedure done, and you have a Medicare Advantage dental as well. That's going to cover, let's say, 25% of it. So when you go in to get that procedure done, you're going to get the work done. And what you're going to do is you're going to go to the front desk of your dental office and you're going to say, Mrs. Susie, I want you to print me out my bill before you run it through my Medicare Advantage dental coverage because I have a secondary dental insurance that pays 80% of the bill. So you're going to get the larger bill amount. Then when you get that bill printed from them, because you've already got the procedure done, so you're going to have a bill, right?
yeah.
You're going to go ahead and email it over to us, claims@unlinsurance.com. We're going to go ahead and we're going to send you 80% of whatever that bill is up to your $5,000 maximum. So the bill is $1,500. So we're going to send you $1,200. That means you still have $3,800 left for the rest of the year in your $5,000 plan. You got $1,200 from us in cash coming to you in 5 to 7 business days. Then your dental runs it through the Medicare Advantage dental. As that's processing, you let your dentist know that you've got a check coming from us in 5 to 7 days. You're going to come back and pay the rest of your balance with cash. They run it through the dental. The bill is $1,500. They cover 25% of that, so they cover $375. Okay, so you're left with $1,125 left, but you got $1,200 from us, right? Remember?
Right.
So now you walked out of there with $75 in hand. That's if you had to pay that $1,125. If it were me, I would ask my dentist for a discount because I'm giving them cash. I would say, hey, what can you do me? If I pay you cash right now, what if I gave you $900? Will you take that? Most
Right.
dentists will say yes. Trust me. My VP of this company, his dad's a dentist, his sister's a dentist. They are going to take that all day long because they know if they have to go through insurance, they're never going to get any money at all. So they'll take the $900 cash over it all day long. They will do that all day long. I promise you. That's how you would work it in conjunction with a Medicare Advantage dental. Same for your clients. It's how they would. Does that help for you, Bob?
That's really good coaching. Is that the maximum, Benny? 5K?
Yes. 5K. Yep. That's the max.
Okay. Yeah, I'll be signing up for this.
Oh, I have one because issue age down to age 18. So what's beautiful is it is issue age. So it does not increase. Rates will never increase on you. Once you purchase it, you have it for life.
Mhm.
So this is great for me. I'm 33. I pay $30 less than $30 a month for 5,000 in coverage. That is insanely good because it does help with, root canals, major stuff like that that is medically necessary. Sure. If I want to get braces, I don't have to fork that out of my own money. If I want to get an implant put in that's not medically necessary, I'll have to fork that out of my own money. I have that understanding anyway, because most dental plans aren't going to cover very much of those things anyway. And if they do, they're only going to cover one every 2 to 5 years. and they're going to cover a small percentage. So I just already assume if it's cosmetic, I'm going to pay. If it's not, I've got 5,000 in coverage that I can utilize. So super great policy. I love this dental plan. It's one of the best dental plans I've ever seen out there mostly because of this right here. There's not a 200-page document. It's one page that discusses the benefits, and it literally says covers 80% of the charges once the $100 annual deductible is paid. Most often than not, too, a Medicare Advantage policy is going to have no deductible. They can go in and get a cleaning done. It'll cover $100 for a cleaning, so they can get their first cleaning paid for. They can pay their $100 deductible with us. With that $100 they get back from their Medicare Advantage dental cleaning, meets their deductible. We give them $100 towards their cleaning, so that's covered. So now they've used the money they got from Medicare Advantage cleaning to pay their deductible on this plan, and now they've got 5,000 in coverage for the rest of that year, which is truly amazing.
Is it different pricing for my wife and myself if we get the plan together, or is it all individual?
So it's just individual. So so whatever age bracket that you're in, Bob, if you're between 60 to 65, then you get 5,000 is $57.09 a month for you, and then it'd be 57.09 for your wife if she's in that same age bracket. Which is truthfully it's extremely comparable because other dental plans, it's going to be right up there and around that same bucket, but it's going to increase every year normally.
Yeah.
Ours will not, so it's just going to stay the same for you guys for the rest of your lives. And then if you have any kids together, you can also purchase the child rider. So let's say you have two kids with you that may still be under your insurance.
Right.
You could purchase that rider for an additional $29.37 and get an additional 5,000 in coverage for both those children, or if it's just 5,000 for the one child, or if it's multiple children, it's just an umbrella of coverage. So you could disperse it however you want. If it's a husband and wife, normally what they do if they've got two children is they just put one child on each plan. So that way they get 5,000 for the kid, 5,000 for the other kid, 5,000 for themselves, 5,000 for the other parent.
What's the age band on the child rider?
It goes up to age 18. So once they hit age 18, then they would get their own plan because it's cheaper, as you can see.
Oh, okay, thanks.
Yep. Let me go to this chat here. Dental plan, is the dental plan only available for Medicare clients? Nope. Any age 18 to 39, sorry, 18 up to age 89. How far is the look back for pre-existing? For which policy, Howard? And then how long, you said, do they need to wait to bill Medicare Advantage? They can do it right away, Ginger. So when they go into a dentist office, the dentist can print off the bill immediately before they run it through the dental. Even if they did run it already, they can still print off the previous bill. They have access to that. At least I would hope. And if they didn't have access to that in their finance system, I'd be very shocked that dentist office is going to even survive. But yeah, they can get that information almost immediately, the same time that they start sending information over to Medicare Advantage. Howard, you said, what is the financial rating? Can you come off mute, Howard? Because your questions are a little too broad.
Okay, you hear me now?
Yep.
Yeah, what is the standard board rating for the company? Your company, you say it's a sister company of GTL, but what is the financial rating for this company?
You're talking about you're talking about like our financial rating? We're A+, like we're super high up there.
Yeah, Standard and Poor's.
Yeah.
Okay.
Yeah.
And explain then about the pre-existing conditions. You say it's different for different plans?
Yes, each plan is going to have a different pre-existing condition period. It just depends on the plan itself. So, for instance, if it's a guaranteed issue product like this one here, 12-month pre-existing condition period.
Yeah, I understand the pre-existing or the waiting period, but pre-existing conditions. Let's just say someone has had
No. You're mistaking me.
Okay.
12-month pre-existing condition period.
Okay.
Not a waiting period. Guaranteed issue is a 60-day waiting period. 12 months pre-existing. Any condition they've had previously, they cannot claim on it for the first 12 months of the policy.
Okay, that's what I mean.
Yep. If it's the regular hospital, this one here, 6 months.
I'm sorry. I primarily was asking about the dental.
Oh, dental. Yeah, there's no pre-existing condition period for dental. They just have the wait. They just have the waiting periods.
So if someone has an X-ray and it's determined that they have a cavity and they don't do anything about it for 12 months, then it can be covered.
Yeah. Yeah, it don't matter. You know, it's the waiting periods with the dental, right? If they've got a cavity, that's going to fall into the 6-month period. It's restoration, right?
Mhm.
Just basic dental work. So if they haven't had credible coverage for 12 months and they pick this plan up, they just have to wait 6 months before they can get that cavity taken care of for the restoration.
And how long has the dental been, this product been out there?
Well, UNL's been around since 1961.
Yeah, but the dental plans change, just like Emeritus changes their plans.
Yep.
Delta Dental changes their plans. How long has this product been out there? And are there any kind of testimonials or ratings?
Yeah, we've never changed a plan once. Not one time have we ever changed any of our plans as far as lower benefits or anything like that ever, and since 1961.
Okay, thank you.
Probably the only insurance company that's never done that, truthfully. Yep. Great questions. Okay.
Yeah,
So
I couldn't find the moot.
It's all good, man.
Okay.
Okay, so that's actually all I have for you guys here. I want to try to keep it under an hour if possible. Amy, yeah, he asked about client ratings. So we don't have any ratings from or like reviews from a client itself that I mean, I'm sure I could probably find some on Google or something like that if I dug around. But I haven't like dug around and pulled up specific ones on dental or anything like that. I will tell you though that if you want to know some statistics, our retention is well into the high 80s on all of our products. So people keep our products; they do not drop them, unlike a lot of other carriers out there.
One last question: is this just in time, or do we have to contract ahead?
You do have to get contracted, but contracting is really easy with us. It doesn't take more than like 24 hours typically to get you contracted. NCC is already contracted, so I don't know who your liaison is that handles your contracting is, but if you reach out to them, they already have an email that they can forward to you. We can get you contracted really quickly, and you can go out and sell. Now, if it's taking a little bit of time, you are more than welcome to print off a application and do a paper application by hand and send it in, and we will process that for you once we get you contracted and everything. There's that option.
Thank you.
Yep. Okay. Now, really quick here as well. On this screen, this is my email and my cell phone number. This is actually my personal cell phone number. If I don't answer a phone call, it's probably because I'm on a plane flying somewhere or I'm in a training like this, so I can't answer, but I will definitely text you and then call you back when I can.
Thank you. Great job.
Yep. Anytime. You're welcome. You're more than welcome, everybody.